Okay, let's begin. Hello, everybody. Welcome to this live trading session. My name is Pedro Mejias. I'm with Nailing FX, and I want to show you a little bit more about the order flow system that I trade with. And before we begin, let's read the disclaimers. The following video clip demonstrations are for educational and instructional purpose only. Tradewithufos provide this video purely for the purpose of demonstrating the method of using the product. Users understand that all the content used in this video is purely for demonstration purposes only. It is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the result you may receive on using our products. All right. As I said before, my name is Pedro Mejias, and if you're watching this recording, in the screen right now, you can see my email. It's pedro@tradewithufos.com, where you can contact me at any time. We did a little bit of change on the schedule. I was on Thursday before. Now I'm gonna be on Tuesdays. I think we're gonna be like 1 week or 2 weeks in FX Street in the month, and then you can find me on YouTube. There's the link also in the screen right now. It's youtube.com/c/tradewithufos. It's the channel where you will find me on Thursday at this same time. Okay. All right. If you are new here, I've been showing you guys every week in YouTube and on FX Street the order flow trading system, which is a quantitative trading method. Okay, I want to explain you a little bit. It's your first time here. It's good to always do a catch up in case somebody missed something. And if you have any question, please use the chat. Right now you are live here, or you can send me an email at pedro@tradewithufos.com, whereas you can ask me for the software you want to use our softwares. Okay. Let me tell you a little bit about what you normally see on the trading apps, trading platforms. This is TradingView, and here I just want to show you what most people do in everyday trading. They tend to use the technical analysis system, right? Where it's the most simple stuff. It's very easy to learn. It's everywhere. Everybody knows how to do that. Looking for, I don't know, figures on the charts, trying to read the candlesticks, making, I don't know, support, resistance, Fibonacci, hedge, wedged forms, butterflies, I don't know, you name it. There are a lot of stuff, which are the most common system that people use because it's very easy. Everybody knows that, but there's a problem, of course, that everybody knows that. Everybody sees the same thing, right? Everybody sees whatever is going on the chart, and if somebody learns to figure out how to, I don't know, draw a butterfly on the chart, somebody else will as well, and everybody will know that there is a butterfly there, and somebody will take advantage of that. Okay, that's mostly how technical analysis works. Sometimes it works because somebody make it works, but most of the time I guess it won't work because it's what everybody sees and everybody thinks that is the the best thing to do. Here you can see on the screen, this is the euro. It's a 5-minute chart. You can see these green and yellow bars here. This is the UFO indicator, which is pretty good because tell you where the most probable buying areas are or selling area on the chart. Okay, that's pretty good. You can access to it. Here's the link is tradewithufos.com/Pedro. You want to use that this application. Very intuitive, very simple. and it would help you anyway if you are using any of the technical analysis I just mentioned before. But that's not what I really want to show you today. I want to show you more advanced tools that will really give you an edge on trading. That's why we're here. We need to find something that really put you ahead of the other traders. Because one thing that you need to have, if an edge, everybody is here on the market is trying to take money away from others. All right, that's how it works. Sadly, but that's how it works. So you need to be ahead of others in order to, to survive first, and then start making some money. All right, you can see here is the euro chart again. This time I'm looking at the tick chart. I prefer use tick chart because it doesn't it don't depend on time, because for me time charts are pretty much useless because many things can happen in in 5 minutes, in 1 hour, in a day, or whatever. Many things can happen, and you don't even know what happened in that actual bar or actual candle. You know what happened there. You don't know. You have no idea why it moved up or why it moved down. That's what you need to know. So that's how we're gonna get our edge. Okay. But today I'm gonna show you simple ways to set up levels, because it's something is important in trading, and I hope you understand this, is the volume. Okay. And that's why I use tick charts, because it shows me actual trades. Okay, it moves according to a set of a number set of trades. Okay, in this case, I have 233 tick charts, meaning that every around 233 trades, it will create a new candle. Okay, that's when I use candle. That's what I want to show you. Remember, if you have any question, please just use the chat or use the email that I showed you before. Okay, let me explain a little bit about what you're looking at right now on the screen. This is the it's a candlestick chart for the euro. You can see on the right side, this is the liquidity. The liquidity, if you don't know, is the pending orders that are there on the market waiting to be filled. Okay, these are pending orders. All right, every pending order have a number here on the right side, which means how many contracts are there waiting to be filled. Okay, these are passive traders. They're waiting for the price to reach the level. Okay, so this is very important because you can know where the money is, where the patient traders are, where the price can go faster one way or another, because you need liquidity actually to in order to put money in the market. Okay, if this was zero, you won't be able to do anything because there's no liquidity available, so nobody can buy or sell anything to anybody. Okay, so that's a very important thing that you should have in your trading. Okay, liquidity. If you trade just like this, just with the candlesticks, you don't know about anything. You don't know how many pending orders are here. You have no idea. You're practically blind. Okay, you're blindfolded here. You don't know anything. You don't know the volume. You don't know where the money is. Only you see here are candlesticks going up and down, but you don't know why. Right? That's the reality of this kind of trading, this technical analysis stuff. Right? It's pretty much useless. But if you have the tools, you have the all the tools you can get to be on top of others traders, is the right way to go. So as you can see here, for example, you can see this huge bar here is liquidity here, and you can see how the price is keeping right below it. All right, it might go just through it. That's not what I'm telling you right now, but here you can see how at the moment this liquidity here is a lot. It's 200 and something, 257, I think. It will be very hard for the for just a few orders to go through this because there are a lot of pending contracts here. So they have to be a big order or a lot of consequences order to take all the availability here, okay, in order to push the price up. All right, that's something that you can use in your favor. If you're looking for a level, any level is the support, resistance, or even the technical analysis stuff like, I don't know, Fibonacci or whatever, and you find that at that level, it is a significant amount of pending orders, it will mean something. It will mean that somebody is actually looking at that and they put a lot of money on it, all right? The thing that you won't never know at this point, just by looking at this, if this will go up or they will remove. Just like now you saw how this bar became shorter because they removed the contracts that were available there at the moment, because that can be done. Somebody can just, put a lot of money here and then take it off. And of course you will think, oh, maybe there's something important going on here. But somebody just might be just playing with you, because if you don't know, let me tell you, the market is full of traps everywhere. Okay, everywhere there are traps everywhere. They want you to put your money somewhere specifically in order to take it away from you. Okay, that's how market works, and you have to be aware of that. And that's why I'm telling you, you need the best tool to fight back and to survive in this really, really difficult environment. Okay, so I don't know if you have any question, please use the chat or send me an email later if you want. All right, so you understand now what liquidity is and how it might work. And here, for example, you can see how many contracts in total are in sell and in buy here. Okay, you can see in everything here. And I'm telling you this, I go a lot higher. You can see all the pending orders all the way up and the same all the way down. Okay, so you need a fee provider to be able to look at this. Okay, you can see here 455 contracts at this price level. So somebody's just waiting for price to reach here to buy all these contracts. Okay, but that's something that you don't see if you're only looking at bars like this. Okay, you're only looking at bars like this, all you see is bars, and what happened every 5 minutes is we go down and up every 5 minutes. That's all you get with candlesticks and no data fee from the market. All right. Let me see. There's a question here. Wait a second. Trying to find I just send the question to the directed to the chat, but to the I think question and answer, right? Let me see. Okay, here it is. Okay, Andrew. Yeah, no, you won't find this on MT4 platforms, of course not. MT4 platform will look more like this one I'm showing you right now, just candles. The volume on MT4 platform is useless because you will only see volume for the broker you are in, okay? And this is a trick I'm gonna show you today, how to see actual volume. And you can trade on MT4, but I recommend you to to analyze the market and find your entries and your areas, your zones, your levels at a professional trading platform. Okay, that's what I will recommend you. Where can we find chart like this? Okay, this is an app. It's called ATAS, and you can I can send you the link for the app. Just send me an email. Here's my email. It's pedro@predictive.com. We'll send you the link. You can try the apps, the data feed, everything. will be there in the email, so you can try it and even know a little bit more about it. And if you have any question later, I can even send you my my templates, okay, when you want to use it. Let me go back to the chart now. Let me know if you have any other question, please. Remember, check the charts, the chat, and let me know if you have any question. And if you have any question later, use my email, please. All right? Okay, let's continue here. All right, so I was talking about volume. Volume is what actually moves the market. Okay, if there's no volume, there won't be any movement in the market. There are two ways of showing volumes in a chart. One is vertical, and the other one is horizontal. Um, Vertical volume is pretty much useless because it will only show you the volume on a candlestick. Okay. The important thing on volume is to see it at the price. At what price did the volume happen? Okay, that's the most important thing. So always when using volume, use horizontal volume, like you can see here on the left side. This is the horizontal volume. Okay, and I also have here the point of control, which is the most traded price during the day. I can set up for the day, for the week, for yesterday. In this case, it's set up for the day. Let me verify that. No, this is for the month. Let me change it for the current day. All right, now here it is. This is the point of control. This is the volume for today. Okay, and you can see which price has been more traded today and what happened at that price. Right, we can find levels just by looking at that point of control. And today we can see how actually, let me just put a horizontal line here, how the price just traded pretty much around in the early of today. You can see how it went through that because there was a lot of contracts there. Right now it's just trading a little bit higher from that point, but around that area, because here is where traders think that there's the more fair price for their entries. Okay, so that's why it's very important to know where is the most volume of the day. Okay, in this case here, you can see that on a weekly base, daily, whatever. You can use that. You can see current week, for example. This is the current week level for the most traded price during the whole week. Okay, if somebody's accumulating, probably will be doing it in this area. You can see how these rotations happens, all right, nearby this price, and this will give you another important area or zone to trade. Okay, because you know that price when it gets into this area, it will begin to rotate like this because somebody's actually accumulating contracts in this area. And all you have to do, one of my favorite trade is to wait for the breakout on these areas. Okay, when this breakout happens, let me see if I can find something. Let me see. I'll give you an example here, for example. Let's just extend this a little bit here. Okay, so you can see what I mean. It's not the perfect example, but it's just to have an idea how to trade these zones. Okay, when you see rotations like this and there is a breakout that you can see here, you will expect the price to get back in here in this area. Okay, but you have to be very precise on finding the breakout candle in this case, and wait for the price to go nearby this area and trade. Example here is the price break on the downside, so you will expect the price to come back here to trade again on the downside. Okay, for example, you could have entered here, okay, in this area, and exit you know around here or whatever. You will have to know where to go to exit. I will show you how later. Okay, there's a very good indicator that will help you determine where's the best spot to exit. Very simple. But this is one of my favorite trades because it happens a lot and it's very easy to spot and have a very high successful rate. Okay, so this is one of my favorite setups. This is not the perfect example. Okay, just to show you a little bit how it might work. All right. Okay, remember, if you have any question, please use the chat. And okay, let's continue. Okay, so levels. How to find levels? One of the ways to find the levels is with, of course, always with volume. Let me just clear this up for you. All right, and I have a tool. It's called All Prices. Let me show you that tool. Just a second. All right, let me try to get the All Price tool. I'm gonna need to create one. Okay. Here is the oil price. We are looking at the euro right now, and what this gives me is like I don't know, filters whatever I want to find. Okay, you can see here in this column is the price. Here's the volume. Okay, that we're talking about, and here are the trades: bid, ask, and the difference, which is the delta, right? And you can select for the day, for the last day, for the current week, last week, current month, last month, for the whole contract, for a custom period like dates, you can just put your dates here, and it will show you, everything that's been happening during this period of time. Let's give you a quick example. Let's take today. Okay, for example, this is the most volume traded price for today, which is this one, point of control. No surprise about that. But you can find levels of interest by, for example, choosing the delta. The delta is the difference between buyers and sellers. And here, for example, the most high negative delta was at this price, or the positive delta was at this price. Okay, let's find that price on the chart. 1.18070. Okay, and it's right here. Okay, this is where that delta happened. Okay, and you can see this is for the day. Okay, and you can see how when the price was lower, this is the separation of the sessions, how it went high into that area. Okay, and they put a lot of trades, all right, into the ask. Okay, and that made that area that we just saw with the oil price here. It made this 214 different between the bid and the ask. You can see how the ask was bigger. All right, so this might be a level that we might be looking at. As you can see how the trades just, when the price just reaches here, you have a hard time to go through it. Okay, or it just trade, between even on the upside or the downside, but it's a pretty clear reference for something. Okay, we don't know if it's gonna just go through it and go sky high or low, but it is used by traders, by a big trader in this case. Okay, it's a big trader who is looking at this price. Okay, to what he's doing, we can see here very clearly, is hitting on the ask. Okay, that's what that trader is doing, and that's a way how you can look into levels. Okay, so what it means that even hitting on the ask. All right, the ask is in liquidity. Let me put it like this: is this side. Okay, it's the selling party. Okay, but he's been hitting on the ask, meaning that he's been buying to these guys who are actually selling. Okay, and what happened when somebody complete, for example, the line of liquidity, it will move the price up. Okay, that's what's happening right there. But as you can see here, it's actually not moving the price any higher. All right, it's just keeping it around it, meaning that it has intentions of not to move the price higher. All right, it's just taking the liquidity available. All right, it can be a wide area. Can be this, can be even wider like this. Okay, you can see here, for example, how wide it can be. The area of this trader is being, you know, taking the liquidity on the outside, but he's being very careful not to allow the price to go higher. So we might think that his intention is to, is maybe putting a trap here for this trader that might think, oh, the price is gonna move higher, so I'm gonna keep buying, and what they're buying him, his contracts, all right, and that's why we have this big difference here on the ask on this line. So what are we waiting for in this area right now? I will just wait for a breakout. When this guy finish loading up a lot of contracts, because one problem when you have a lot of money, you have to be very careful how you put your money on the market, because everybody will see it, all right? And when there's a lot of money, you have to do that technique. You have to buy a little bit every time the liquidity fill up, nearby. It doesn't have to be just one price, but can be nearby. They have they can do that because they have a lot of money. So they will be filling up his contracts around this price. And once they are ready, all right, they will advertise. It's like, it's like marketing, right? They're marketing here, like the price might go up or down, whatever. But once they're ready, they will make the price drop, okay, or go higher, whatever their intentions are. And when that happens, there are traders here who are on the other side. Okay, if this goes down, okay, after they're finished accumulating here, the traders that were thinking that the price was going to move higher, they're going to be losing at that time, right? And when somebody's losing, they're gonna get nervous, and some stop loss might be hit. And for example, you are buying here. Let's say you enter here because you thought, oh, this is this is a time to buy and it's going to move higher. So when you buy here and the prices start to fall, you will be nervous, right? You will be losing money. You have two choices. One is to hold. We hope that the price come back up, or you will close your trade. Okay, and it might be either automatically by a stop loss or manually just by you closing the trade. But if you are buying, how you get out of the market? If you are buying, you get out of the market by selling whatever you have, right? And we just start selling here. A lot of people, a lot of traders that were thinking here that the price was going to move higher, they start selling, they will start closing their position. That will drive their price down very easily. Okay, so the guy who set up the trap here, this guy who is hitting the ask every time he gets around this area, right? He will do nothing. He will just let your stop loss being hit, and of course there are two things that will move this price down: stop loss and other traders joining in. Okay, because they will see the same way that they thought here that the price was going to move higher. They will see the opportunity here and start selling. And these two components combined, stop losses and the new traders joining, will move the price very, very fast down. Okay, and that's what these traders are waiting for. And you can take part of that. You can participate into this by being aware of the traps. Okay, where is the money? Where are they putting the money? Okay, in this case, we know somebody's playing with this area right here, and we also know that there will be a lot of traders that will lose money and their stop loss will be hit, and others will be waiting for the opportunity to get out at break even or at a small loss, right? And that's the best opportunity to take, because uh, when this breakout happen, when the stop loss are hit and traders are joining, when these the market mechanics will make the price move higher again, okay, because it need to refill the liquidity, all right? So it will move back up, and when this move back up here, all the traders that are still with open orders here will decide to close their trade. And what happened? The same thing that will happen when stop loss is hit. They will be selling the order. So if they're selling, they will not start moving the price down. And again, this guy might be still accumulating here. So it will move the price down again by selling. The same way other traders will join, and so on, so on, will repeat the move on the way down. And for how long this will happen? Until this guy here, who is actually initiating this accumulation, is satisfied with his profit, and that's it. And then it will happen again by somebody else or another institution, another hedge fund, whatever you call it, whatever you want. It will happen again all day. Okay? It happens all the time. So these are very, very good opportunities you can take, but you have to know where it's happening. So one way to understand that is using order flow system like this, where you can spot either delta negative or positive. Okay, you can spot the highest volume for the day, for the last day, for the week. Okay, you can set up levels that will actually work most of the time, because it's real money there. It's money that is actually there. It's not just a butterfly painted on the chart. Okay, it's something real. And something else. I was telling you about an indicator that I use most of the time for letting me know where to exit and where to get in. I will show you in a moment. But before that, I want to tell you something about um, when you're trading like this and you want to, I mean, you analyze here, all right? You find your levels and everything, but you still want to trade in the NT4, you can do that. It's perfect, because the thing with trading with NT4 and Forex broker is that you can have pretty much easy access to that market, right? But I would recommend you to actually go into the futures market, where you will have more advanced tools, more information, okay, and more advantage over the other traders. You can still trade on the Forex market if you like that, but always take a look into the futures market for charting, okay, for analyzing, because it's actually where the traders are looking at. Okay, the price will be a little bit different when it's beginning of the contract, or ending of the contract will be almost the same price, but on the graphical look will be the same. Okay, the movement will be the same. So that's one advice I want to give you. If you want to trade the forex market, use the futures market for reference, okay, or directly trade on the futures market. Anyway, that will help you to improve your trading a lot. All right. Now let me add the indicator I was telling you about, which is the VWAP. Let me just go for it. So I can show you how I work with it. Let's put it here. All right, this is the VWAP. It's like moving average, but it's based on the volume. Okay, and remember that volume here is the most important thing we can use for trading because it's where the money is. So here is the VWAP is the volume average. Okay, and what it's telling us, and this is used by many algorithm traders to put their orders in. Okay, they must use this, the red one is the VWAP itself, but the two blue ones is the deviation. Okay, it's a deviation of the VWAP. And most algorithm traders use the deviations to trade. Okay, yeah, they use it like a reference. And according to you research a little bit about the VWAP, you will find that according to the market, it's the most fair price, okay, to put an order, and that's why you see most trades happening around it, or once it breaks outside this big wide, you will find most above or below the big one. Okay, as you can see here, it was at this time probably during the day is where this you can see it's almost flat because was the time when traders start using it or start creating this VWAP as a reference. Okay, because they were traded around this price. You can see it's the same uh, in line with the point of control. So at this time here is when the reference was created. So it's going to be used during the day as reference, but they're going to use probably the deviations, okay, to trade. You can see how most trades happens actually between those deviations and between the VWAP. So how I use it? Well, if I'm trading, um, for example, a breakout, let's picture here, for example. Let me just put this a little bit bigger so you can understand better. Let's say we are looking at this right now. Let me just take this away. We're looking at this right now. This is, we can see a rotation here. Somebody's accumulating. Let's say this a level of importance. Okay, this is just an example for you, so you can understand what I mean. And then it's a breakout. Okay, here's the breakout, right? You can see very clear that it break out of this accumulation, right here. And what I was looking for is to enter nearby a deviation. I never use the last one. Okay, I prefer to use the first one or the big one. Okay, because I know if you don't know, for example, here value area high and value area low, what it means that between these two lines happens 85% of the volume during the day. So everything outside these levels is, it won't have a very big move, but when it does, it will be actually very big because there's no resistance whatsoever here, okay? So for my entry, I won't enter outside this, all right? I prefer to enter inside because I know we have, the movement will be bigger for me. So if I take as reference this deviation right here, and I look at the candles, for example, a breakout candle, it might be this one. Let me just let me delete this one here. I'm gonna use as it's just an example. Okay, you have to look more deeply into this, but for you to understand what I'm saying here, how powerful this is. Okay, so you can you see this, for example, this is a breakout candle, but I would like to find inside this candle, okay, which price will I put my entry? Okay, you can see how the price went down from this line. So I'm gonna turn this chart into clusters, okay? And here is my candle, right? Let me change the volume for, yeah, it's fine, volume. Okay, so here I can see the volume at each each price inside the candle. Okay, this is only you can see this in this type of system. Okay, you cannot find this anywhere else. Right, so it's very powerful. You can customize this at many ways and a lot of levels where you can see, for example, the delta. Okay, you can see the difference inside each, where was most, different in between buyers and sellers in the price inside that candle. Okay, you can see the bid and ask, right? Every trade that happens inside this candle. So you can see here what, and the volume, for example, graduated volume. You can see exactly the volume. I mean, there are a lot of way to personalize this. And well, right now we're looking at volume, but let's see, you have trades as well, okay, in graph, delta, but based on trades, okay? And this is trades and with the delta inside it. So there's many ways to combine here, but let's just look at the volume for now, okay? So we can see how much trades happens in each price, right? And inside this candle. So I would like to see, for example, the most volume happen in this price level right here. All right. So let me put a horizontal ray below that volume here. You can see how exactly below that is when the breakout happened. Okay. And how the next volume was below this one. But you can see here, for example, this one happened here, but it didn't make any, and the price didn't move any higher. So it keeps below this level. All right, so that's a very good sign when a breakout happens. So I just put this line here. Let me, let's go back to candles. Okay, exactly where the breakout happened. All right, you can see, so the box I drew before was pretty much accurate, but we're just lucky. I didn't know that the volume was there. So as you can see, now I know where to enter. And look at this. You can see the liquidity here is 131. So that's just confirm what I just look at. Okay, this is an important level here. And what will happen when price reach back here? I will enter not here. I will enter below because there is a lot of contrast here. So if I put my order here, I will be the 132. All right, so it will take 131 contracts to be executed before my contract will be executed. So I will put my order below, okay, maybe here. All right, let me put just sell limit order here. Okay, I have my order here because I have more chance to be filled here than here. Okay, and that's where my order is gonna be. And I just wanna wait patiently for the price to reach this area. All right, look at this, is right below the deviation, which is very important for me because it's the deviation of the volume average. And where I will get out, where will be my target? My target might be either the big WAP here or just about. I will have to take a look always on liquidity because if I plan to get out, for example, here, let's set up horizontal line here. If I want to get out around here, I will look first at what's the liquidity, okay? Because I don't want to be the 104 or 130 in the list, okay? I want to be, I want to get out maybe here at this level. So I'm gonna put another line here. So my target is gonna be this, okay? Let me just delete this one. This was our level, for example. So what's going to happen? Well, probably the price is going to move up every time you see the price when it reaches the deviation. Most of the time it will bounce back down. In this case, we have some volume here. Okay, remember it's not a perfect example, it's just an example for you to understand how this works. So I have the volume here at the top that will make it harder for the price to, just move through it. It might happen, but, it's a probability, high probability that the price will just move around here because we have some volume, all right, in this area that will help us as a contingency for the price, right? So our stop loss, of course, will be up here. It can be here, for example. Let's put we're setting, so I'm going to put a buy stop here, okay? This will be our stop. Why here? Because it's about the accumulation area. I will put it a little bit higher. And it's about this liquidity, 173. So you're going to have to take 173 contracts to go through this. Okay, so it's going to be harder than just go through to 20 or 25. Okay, that's why the liquidity is important in this case. Okay, we can use that as reference for stop losses, for entries, for many things. Okay, so you can see you have our rotation here. You have the deviations, and you have liquidity to look at. So it's like a confirmation of levels. Okay, we found the level here was interesting. We found the breakout candle that has volume on it, and the volume actually works as a resistance level here. And you can see how the price went down. Okay, so these guys that make the purchase here are losing right now. Okay, if they are not already out of the market. So when price reaches back up here and we enter here, the most probably it's going to happen is that the price will begin to go down again. Okay, and that's when we are want to get out of the market, either nearby or the big WAP itself, because remember that the point of control here, or here because we saw that there was high liquidity here that will actually make harder for the price to move below this point, any soon. So we prefer to be safe and to be out of the market as soon as possible with the least resistance. So that's why we're taking into consideration the liquidity that is here, okay, nearby this area. So our exit can be either here or here after this horizontal line we just set up, okay? Remember, if you have any question, please use the chat, or you want to send me an email. My email is pedro@tradewithufos.com, where you can send me an email there and just ask me for the software. I will send you the link. All right, so you can have access to it and check it out. You will have the feed and everything, a demo account where you can practice all these principles. There are a lot more. You can look at my previous sessions. They are more in depth with the system, a little bit maybe more complicated. I just giving you a head start here, very simple. We can just simply start using the system, and you can also combine the information, the liquidity, the volume with any other technique, just for a confirmation purpose. You can use that combined with any other stuff, okay? Because you can actually confirm that the level has any importance if you see money in that level. You don't see any money in that level, that means nothing. It's just a line on the chart, okay? Everything has to be verified with what moved the market, which is money, and you translate it into volume like this. Okay, for example, this right here, where this I set up this line, you can see there are 130 pending orders. Okay, here to be filled. It's a lot of money. It's a lot of money there. If one contract is $100,000 dollars in this case, 130 will be $13 million just here waiting to be filled. Okay, so that's something. You can see how it was removed, but it just moving higher here, 134. Because when they see that the price is reaching close, they just move the orders up. But you will see how the price, how the market will react actually when it reaches here. Okay, there will be some reaction there. You will see many sellers or buyers, but some reaction will happen at that point. Okay, let me know if you have any question on the chat, or remember, send me the email. We can no, just wait to see if we can see actually how the price reaches here. It's almost there. It's pretty close. Let's see how close it is. It's 10 ticks away. Okay, you can actually reach there. We can see there's the point of control here. So there's going to be a lot of trading happening in this area, and you can see how the VWAP is actually in line right now with the point of control, which is a very interesting price level. Okay, but anything can happen here. It can just go up or go down because it's right on the middle of the trading day. Okay, but you don't know that if you don't know where the point of control is or where the VWAP is. All right, so you actually need these volume tools to be aware of that. Okay, any other way, if you're just using candlesticks like this, you're pretty much blindfolded. Okay, because you don't know anything. You don't know what's happening. You don't know where the money is. You don't know somebody's buying or selling. You don't really know anything just by looking at bars. Okay, so if you want to have an edge, you need to use powerful tools. You need to learn how to use it. It's not easy, but you will get it on time and with practice. But you need to know the market mechanics. Okay, what moved the price, what moved the market. That's the first thing you need to know. And there's a session I did on one of the first session, I think, maybe the second or the third, I did on FX Street. You can look at it in the FX Street website. Just put my name, we put Pedro and the search bar, and you will find my previous session. Look up for the market mechanics session. I explain there a little bit how the market actually works and how the price move up or down. Okay, I spent there a little bit more graphical. Maybe you can understand it better that way. Look at that video and you will find about macro mechanics. And one other thing I would like to tell you, we are almost finishing here, is to always be patient, okay? And if you see that the price, being a lot of time and it's not reached your level, or you see a lot of changes around this is an indication that maybe the people who was interested in holding this price no longer interested, and just don't trade, just cancel. There are more opportunities always on the market, right? Don't take unnecessary risk. Remember that your main target here when you're beginning is to survive. So don't take unnecessary risk. Learn your thing first. Specialize in one asset like the euro or whatever you want, but specialize in one. Don't trade a lot of stuff. That's actually very stupid. And use tools. Use the tools, right? But use the smart smart tools that actually shows you what's happening inside the market, right? Just don't go there for any drawing tool like a butterfly or whatever that'll tell you that that will work. All right, so guys, this that's it for today. I hope you enjoyed, and let me know if you need anything or you have any other question after this session. Just send me an email at pedro@predicted.com and let me know your thoughts, or if you need the information, you need any templates, anything, just let me know. All right, I'll be happy to answer you guys there. All right, so that's it for today. I hope you can join me next Tuesday. I will be on YouTube on the Trade with UFO channel. You can join me there as well, and we can continue this journey on the order flow system. Okay, this is just a sneak peek. Okay, this is a lot more to see. So I will really like you to join me on Tuesdays. Every Tuesday I will be either on YouTube or FX Street. Just like check out the calendars and you will know where I will be, or just send me an email. I will tell you where it is. All right. Saying Andrew, thank you. I really like that you enjoy. Hope to see you next Tuesday as well. And well, that's it, guys. See you next time. Okay. Stay safe. Bye-bye.